Okay, it's the 1st of April. It's a Tuesday. We've got about 30 minutes to the NY Open. We're going to get to the charts in a second. Yeah, I think it sound good. Yeah, I think we're good. Where's this? Just a second. It's the same. Give me a thumbs up if the audio is clear. There's some feedback at my end. Maybe at my end. Okay, I'll assume it's good. Um, let's start with the calendar. So, this is NFP week, first of the month, first week of the month also, and the first of month. So we've got, yeah, in about 2.5 hours, there's some news. Not very important. There's a long time from now, but right now, for the next couple of hours, there's no news at all. Okay. But the what's important to know about today, about tonight, is that the tariffs are supposed to kick in. The U.S. tariffs are supposed to kick in tonight. Thanks, Philip. Um, it's supposed to kick in tonight, right? So the markets have already moved, right? I mean, if you just look at the daily time frame, in anticipation of the tariffs, we've moved 1,300, almost 1,330 pips. We've almost tapped 3150. We're just a pip away from there, I think, from 3150. We fell short by a pip, but this is in anticipation of the uncertainty in the market in the coming few weeks and months, because the countries because market doesn't know how individual countries are going to respond to US tariffs. So when there is uncertainty, whenever there is uncertainty in the market, um, gold is known as a safe haven, so funds move into gold, right? So in, so therefore, obviously, you can see when there is a lot of buying happening, gold prices will continue to go up. It's a simple law of supply and demand. The more demand there is, these prices will continue to rise. Okay, so prices we've gone up by about $130 from this range, from about 3023. We've pushed up about 130 US dollars in terms of change of price. Okay, so let's go up a time frame to the weekly. Yeah, so the weekly, we started off yesterday straight off the bat, price pushed up in the Asian session as we saw yesterday in the streams, and today we've already reached 3150, right? That's where price was heading, and we've got there. Now again, there is no supply at all. We're at all-time highs. We've been at all-time highs for a long time, right? We're just pushing up. Now, where on the chart, where can it go next? To 3,200. That's all the in terms of technical analysis, where can price go next is 3.2, right? We can retest 3150, then possibly head to 3.2, right? But obviously before that happens, there could be a pullback, there could be a reversal, anything can happen. But there is no price action to the left for us to know when or where that is going to happen. Okay, so on the daily we are pushing up. We have a very small wick at the bottom. We could push down, create a larger wick, or pull back to 3,100 again, retest it, and then push up. Any of those things can happen. We're going to have to take a look at the lower time frames and see what's possible today. Okay, so let's go to our trading chart. Now, yesterday we did take before we draw the zones, we'll do a quick recap like we do always. um, we took sells yesterday, so let's just go here. Right. So what happened was I ended the stream at the close of this candle. So basically at the open of this candle. There was no trade. This is a 30-minute time frame. This is a liquidity candle. We had drawn all of these zones and the liquidity candles, all of these during the time of the stream. So 30 minutes before the stream is when we did all of the prep work, and we formed 30-minute resistance right here because you can see a back candle, but it's a doji. So I said there is no trade, right? So once when you form a doji, even though it's a back candle, even though we form resistance, there is no trade, right? Because price can go up and create 30-minute resistance again, or it can push down, right? So there is no trade. The safest thing to do is when you see a doji, if it's a bearish, if you're waiting for a bearish, if you're waiting for a back candle to form, but it's a doji, is just to continue to wait, right? That's all it means, because on the 30-minute time frame, all that has happened is this candle on this time frame has no information. We've opened and closed almost at the same price, right? So there is no information. There's not enough information, right, for us to take sells to come down. So you got to wait for the next candle to close. The next candle closed at 16:30 IC market server time. So let's go to the 15-minute chart. So this was the close of that candle. So just before the 30, this is the close of this is the second 15-minute candle. So just before, when it's the last minute of the candle, because you know the candle is going to close obviously bearish here, because it's somewhere here, price is here, and there's just like a few seconds for the candle to close, 30 seconds maybe for the candle to close. So it's obviously going to close bearish, and that is going to be a tradable 30-minute candle because it's a big body and a big push down. So what I do is I go down to the 15-minute time frame and look for the most recent two M15 high breaks. So this one broke this high, and this one broke this high, right? So the most recent low to the highest high is that. Okay, let me just get rid of this. Okay, so this high is 654,181. Yeah, so that's how I would draw the fib, and then I I saw that this 15-minute candle, that's the close of the 30-minute candle, has already tapped 3121.81 of the fib, right? So it's unlikely when you have a 108 pip candle pushing down, the price is going to come all the way back to get you entry. So soon as the 30-minute candle, which is this candle pulled back closer to this area, I took a sell. Stop loss was above I placed my stop loss above the 30-minute candle high, which is this one here, instead of above there, because that would have been too much above that. So that was about a 50 pip stop loss, and price came to the TP levels that we had marked during the stream, 3110 and then 3101, right? And we tapped 3100 to the point, and then we pushed all the way up again, right? Now I said if you want to take buys, wait for 30-minute support to form. 30-minute support did form, but way too high, right? Because it should have formed somewhere here to take the trade to go up, but 30-minute support formed way up here. So there is no place to trade, right? Because you can't obviously have a 240 pip stop loss, right? So it makes no sense. So 30-minute support did form, but it formed very high up on the setup instead of forming down here. If it did form down here, that would have been a perfect trade to go all the way up to hold it and to probably hold towards 3150. We spoke about that. We said if you take buys, your TP levels are 3125, 3129, and then obviously 3150, right? Okay, so that was a trade idea that we took yesterday, and it worked, the sells. Let's get rid of this. Just a second. All right, let's start. So there is a rally, 3 basin candles. The reason that I start with this is this candle has more collective wick than it has body, and so do these 2 candles. And then this would be the move out, right? That is, there is hardly any wick on it, hardly any wick on it, a lot more body than wick, and you can see the push started up here, and then we continued even higher and went higher, right? So this would be the base. We're going to take a look at that area on the 1 hour as well later on, but let's put these prices on for now. 790,996. Okay. That's a mess. That area is a mess because of what happened yesterday. We ranged a lot, okay? So what I'm going to do is this. I'm going to bring the base up here, because on the 1 hour you can see that the move started here, not here. This is just a part of, all of these candles are side by side. They're stacked together right next to each other, right? Starting from about here all the way up to here, right? They're all stacked together. So I'm going to push this up here, all right? And when we do that, we can see the perfect tap here, price tapped here. That is a large zone. It's a 240 pip zone, but we're going to have to probably, we'll find 2 liquidity candles in there. That's fine. Um, yeah, we're going to keep it there. So this open is 445, 445. Yeah, that's better, right? So that candle also becomes part of the zone, and then that's a leg out. So 4 basin candles and a leg out, and price has tapped this and pushed up. It's trying to push up again, right? Now down below is the zones that we already have, so I'm just going to extend those to the right. That's 400 pips away. They should be covered for today. Move these labels also. These are zones from yesterday. Okay. Now, supply. We have a rally and we have a sudden drop. So let's take a closer look at it on the 1 hour time frame. Yeah. So there is supply here. There is a rally. There is 2 basin candles and a drop. So we're going to mark that out. 480898. Okay, let's look at the 30-minute. Yeah, I'm going to bring this lower down here. That's better. So that's a rally. These are the basin candles. 1, 2, 3, 4, 5, and then the drop. On the 30-minute looks better. So this open is 379. Yeah. Okay. Just a second. Okay. Right. Now the next thing is we're going to do is check if this is there is a high liquidity zone. Either of these zones are high liquidity zones, right? So let's start with supply. We're in the middle of both of. We're right in the middle. This is bang in the middle between both zones. Um, so has this taken out? Let's go to the 30-minute time frame. Has this taken out any supply, any demand? There is sort of demand here. Rally base rally. Prices pushed down, taken out this low. Yeah. So this would be a high liquidity zone. So I don't go beyond the 30-minute time frame when looking for high liquidity zones. That's the okay. Now let's look at the. I have to look at the 1 hour for this. There is a rally, there is a base and a drop, and price did. What's this high? This high is 27.18. This high is 27.24. Yeah. So this push up took out this high, right? And this high was taken out. What's this high? 27.92. 27.97. Yeah, so this high was taken out by this move up, right? So this is a high liquidity zone. Right, done. Now we're going to look for a high liquidity candle. See if there's a high liquidity candle in here. We checked this area yesterday, this 30-minute demand zone, and there wasn't one. There was one that kind of crossed both these zones. That was this one. It was, I think, on the 15-minute time frame. Yeah, it was that candle. We're going to take a look at this candle, this area here, right? So the first thing I notice is a big wick. So I've always said whenever you see a big wick like this, that's a liquidity wick because it's a liquidity grab. When price grabs liquidity from one of these liquidity levels, okay, listen carefully. When price grabs liquidity from any one of these 5 liquidity levels and leaves a massive wick, that's called a liquidity wick, right? And that's exactly what this is. We grabbed liquidity from 3100, and that's a liquidity wick. So I'm going to mark that. 343996. Okay, let's go down to the 30-minute time frame because that's 135 pip. There is another one here, 125 pips. Let's go down to the 15. Yeah, that's 141 pips. That is the largest candle. Let's look at the 5-minute. Yeah, this would be the candle here. 78 pips and 61. Yeah, I'm going to use the 15-minute here because we take that full candle because it's a liquidity grab. makes sense to take the full candle, right? How much is this? 137, 142. Yeah, it's bigger. 109. Yeah, 407. Okay, perfect. Right now, let's look up here. If price comes up there, can it be pushed? Can price push down again? Now, if he had tapped 3150 and then pushed down, we would have had a larger wick, and then that too would have been a liquidity wick, right? But we don't have that here. Just a second. Okay, let's go up here. Let's go to the 30-minute time frame. Nothing on the 30. Let's go to the 15-minute time frame. There's nothing on the 15. It's just this big candle here. Let's go to the 5-minute. On the 5-minute, there's this candle here, 35 pips, 28. Yeah, maybe this one, but yeah, that candle. That's the start of this big push down. 150 pip move down. And that's the start of it. Yeah, I'm going to mark that. The 5-minute time frame. Just go to the 1-minute as well. Yeah, clean push down. Clean push down. 156 pip on the 1-minute. Not a single bull candle. Right? So that is the candle. So once you break this high, then we're heading to 3150. 623264. 623264. Okay, done. That's it. That's the analysis, right? 7 minutes to spare because we don't have supply zones. So it's kind of easy. It takes less time. It's not easy. It just takes less time. Um, okay, I'm going to leave this here. 30-minute time frame. So what we have is we have a 1 hour supply zone at the top, which is a high liquidity zone, and we have a liquidity candle there on the 5-minute time frame. We have a new demand zone here, which is a fairly large zone. It's a 240, almost 250, 240 pip zone. That also is a high liquidity zone and also has a high liquidity candle. This liquidity grab right here on the 15-minute, on the 50-minute time frame, there is a candle there. All right, that candle right there, that's a liquidity candle on the 15-minute time frame. Okay, so I'll leave this on the 1 hour, maybe on the 30-minute. Yeah. Okay, so I'll be back in a couple of minutes, and then we'll take a look at what price is done in the Asian and London session so that we can kind of make a calculated guess on what price could possibly do in the first couple of hours or first 2 to 2.5 hours of the NY Open. Okay, just like we do always. All right, I'll be back in a couple of minutes. Okay, let's go to the 15-minute time frame. Let's see what we have in the Asian, what price is done in the Asian and London session. That's the market open. So market open at 3123.25, roughly 3123, roughly 3123, well above 3100. Signs that price is pushing up. Mm, interesting. This is the only significant swing high. Yeah, let's go with that. 2002. All right, so in the Asian session, we had a massive move up, 270 pips, just like yesterday. Yesterday also we did the same thing. Yeah, same thing yesterday. Yesterday was 500 pip move up, almost 500. About, yeah. Yesterday was a 340 pip move up. So today we've moved up in the Asian session, 270 pips. And in the London session, we moved down 240 pips. So almost retraced the entire move down. Almost the entire move up. We retraced almost the entire move. We retraced it in the London session. That's interesting, right? And that is why the daily candle looks like this. The big wick up, and then price went up and all the way came down all the way, right? Um, okay, so let's see what happened. The market opened here. We had a lot of bullish volume yesterday, right? Price grabbed liquidity from here, 3,100, pushed up. There was a lot of bullish volume. Continued, did not need to come to the EMAs. We did create a liquidity candle on the way up. Did not need to come to that either, or to the EMAs. Continued to push up 270 pips. Asian session created the Asian high, pulled back a little bit, tried to push above it, continue higher, couldn't, got rejected. That's a decision, right? Because we didn't tap 3150. If we tap 3150, then that's a liquidity grab. But this is a decision to push price down. The market decided this was too expensive to push price down without tapping a liquidity level, right? So it pushed price down, closed below the Asian high. Sorry. Closed below the Asian high, formed 30-minute resistance, pushed straight down. On the way down, created a liquidity candle, came straight down, tapped the EMA, went back up. There was a lot of bearish volume, and it's pushing down again, and it pushed down again, created the London low. It did not tap this EMA nor the liquidity candle, just the zone, and pushed up. And we've been ranging basically, right? We just pushed up, pushing back down, we're ranging. Now, when was this created? 8:45. We haven't tapped this liquidity candle, right? We haven't tapped the liquidity candle to come down. So sells are okay. Here it is. Here's what here's the analysis. Again, it's a probability game, and when I have all the information in front of me, I weigh it out and I make a calculated guess on what could possibly happen. Price hasn't tapped the liquidity candle, but it's pushing down. For price to for sells to work, price must tap the liquidity candle, right? So I think we are in for buys today. If price comes here, either to the EMA, to the second EMA, creates 30-minute support, and we get a tradable 30-minute bull candle close, we can look for buys to go up. Or if price comes down here, taps the liquidity candle, creates 30-minute support, and a tradable 30-minute bull candle closes, we can look to take buys to go up, right? That's the play today. Because there are no sells, because price hasn't tapped this yet. If sells are to work, if today we are going to go bearish, then price has to come and tap the liquidity candle. Just a second. 58 pips. Yeah, we need to come up. We need to come up. Yeah, price has to come up. If it needs to push down, price has to come up, tap this area, and then push down. So for me personally, buys are what are in play, but I want to see 30-minute support created and a tradable bull candle to close. That can happen with the 30-minute support form, or if you have a 30-minute support form with the bullish doji, then we have to wait for the next candle to close. Okay, it's as straightforward as that. So NY session has just opened. Yeah, there's nothing to do here. There's nothing to do here. 30-minute support hasn't formed. There's nothing to do. We got to wait for 30-minute support to form. Now, 30-minute support can form here because that's a liquidity level. The EMA is here. It can form at any one of these liquidity levels, right? At any one of these, right? You have the EMAs, so those are two, that's why it's plural, EMAs. So that's one, that's the second, and that's another third. That's another liquidity level, right? And then you have a fourth one down here, which is 3,100. So I want to see 30-minute support form. A tradable 30-minute bull candle must close. Then I will wait for a bit of a pullback and take the buys to go up, right? That's what I'm looking for, right? Until price comes up here, no sells. If price comes up here, creates 30-minute resistance, a tradable bear candle closes, then yes, on the pullback, we can take sells to come back down. But we're quite far away from that, right? We're 125 pips away from that. There's a long way for price to go for it to get there. And if it needs to get there, then it has to form support to get there. So that's the trade that I'm looking to take. If price forms support to get there, right? So it's buys. The idea that I'm looking for are buys. I'll repeat. The idea that I'm looking for are buys. 30-minute support must form at any one of these levels, here, here, or here. Any one of these levels, and a 30-minute tradable bull candle must close for me to take buys. That's it. That's straightforward. Now you have to wait patiently. Just have to wait patiently. Now, remember what I said. If you're here at the beginning of the stream, remember what I said today. Tonight, let's just do some research on the tariffs, what's happening. But tonight, EST and EST 12 midnight, the tariffs are supposed to kick in. Yeah, he's calling it Liberation Day. Is there a Trump speech today? No. Thursday. Thursday there's a Trump speech. Thursday. Sorry, Wednesday. Oh, Wednesday. Wednesday, yes. So tomorrow there's a Trump speech. So let's see what he's gonna. Yeah. So but there is no time. There is no set. It's tentative. There is no set time. So we'll have to wait and see. The market's obviously going to react when he gives his speech tomorrow. Yeah, that's tomorrow. Yeah, Wednesday. Yeah, today's the first. Um, Hmm. So the market is could range until that speech comes out. Could range. We might have a we may have a move latter half of NY session today, but the market could possibly range because the details of those tariffs are not. If I'm right, yeah, I don't think the details of the tariffs are out yet. Let's see. Yeah, it's just a lot of speculation. There, yeah, he's giving the opportunity for uh, governments to change their policies on tariffs on imports. So 2nd April is the deadline. I think midnight is the deadline. April yeah, this EST midnight EST April 2nd, sorry, April 1st midnight EST is the deadline. And if they don't, then it's kind of a tit for tat. Whatever they impose is what the US is going to impose. And some countries will try to take them head on, and some countries won't. Some countries will cave in. So there's going to be a lot of uncertainty in the market, and that's going to push gold up higher. Yeah, it's interesting to see what's going to happen tomorrow. I'm just reading the news. There's just a lot of speculation. There are certain products where are charged up to 700% on American goods being imported into those countries. So let's see what happens. So the market is just that shows that the market is just waiting. We're just ranging since London session. We've just been ranging, just moving sideways, right? Neither going up nor down. If you do get support here, the trade ideas are still valid. If you get 30-minute support and a tradable 30-minute candle closes, I'll look to take buys to go up either at any one of these liquidity levels. So either this EMA here, this one here, the second one here, or the liquidity candle, or even further down for that matter, right? So trade idea is still valid. There are no sells here because for two reasons. Price has already moved far away from the liquidity candle. We are quite far away from supply. We are about over 100 pips away from supply. That's the supply zone. Yeah, 115 pips away from supply. And the liquidity candle hasn't been touched yet, right? So if that was tapped here, then maybe, yes, we could look to take sells when price comes up, creates resistance. We can take sells to go down, but the candle hasn't been tapped. So price is very likely If sales are to work out, price is likely to come up and tap that, create 30-minute resistance, and then push down. If price is to push down, right? It has to tap the liquidity candle. Um, so let's see what's going to happen. I'm waiting for buys. Yeah, could be quiet. The first 2 hours of the NY session could be quiet. Even later on, could be quiet today. Just probably waiting. The market's waiting for Trump to say something. Now, having said that, we have a 52, 52, 53 pip candle. So that's a good sign. That's volume. That's a good sign. But we have to wait for 30-minute support. And a tradable 30-minute bull candle must close. But we have a lot of wicks here, right? We have a lot of resistance. There's a twice we've tapped this, created resistance twice, tapped it several times. 1, 2, 3, 4, 5 times. Tap that area. So we could, even if you do create 30-minute support, price can come up here, push back down again. I would prefer I would prefer 30 minutes support to take a trade from down here, right? I would prefer that because if I take a buy here after 30 minutes support and tradable candle closes, if I take a buy here, I'm getting into this resistance, right? Just 30, 40 pips away. I'm getting into this, I'm hitting this. And that area will obviously, my first partial TP would have to be that area. And I don't like that. I don't like having my first TP at 30, 40 pips. I'm looking for first TP to be at least 70 pips, 60, 70 pips. Yeah, 60, 70 pips or more. And then because I always kind of try to look for like a 100 plus pip move on gold, right? Similarly to what we had yesterday. We had a nice clean push down. That was 190 pip move down to 3100, just as we um, kind of anticipated. Price did come down. Yeah, I'd like to take a trade from down here because the profit potential is much higher. 200 and then another 80 pips, 90 pips up somewhere down here. It's 9 minutes more for the candle to close. We're going to wait and see where the candle closes. Don't rush to take a trade, a buy or a sell. Price is literally in the middle of supply demand. If you try to take a trade here, you are the likelihood of price going against you is higher than normal. That's all I can say, because price is in the middle of supply demand. And that's why I'm reluctant to take a buy here because we have a barrier here. You have 30-minute resistance here formed twice, and also because price is in the middle of the two zones. I always like trading at the extreme, and the extreme means you're trying to buy at demand and you're trying to sell at supply. That's the extreme, right? Those are the extremes. I always try to do that. I always try to take my setups, whatever method you're using, try to trade at the extremes. The moment you do that, you will see your RR start to increase. All right, if you try to take trades in the middle like this, it's very little profit potential, and then price immediately goes against you because there is a demand level below, right? Price, supply and demand work like magnets, right? They pull price towards them. So this can work like a magnet and pull price down. This can, if you take a sell, this can work like a magnet and pull price up because we're in the middle. So try to look for trade setups at the extremes, either at supply or at demand. If you have any questions with anything that I've discussed so far, shared so far, please feel free to drop a message in the chat, and I'll do my best to answer anything related to what we've spoken about. Six minutes. Hmm. 6 minutes more for the candle to close. Let's see where this candle closes. If you're going to push up here, close a strong bull candle. If you do close, let's see, the candle has to close. We're going to wait. I'm not going to guess. We're going to trade. We're going to trade what we see, not what we think is going to happen. 30 minutes more. Let's see what happens. This candle closes, forming support, or we're going to push back down in the next 3 minutes and close the doji or close a back candle. Two minutes more. Okay, so this 30-minute candle is pushing up. Let's see if it does close up here. This one took out this low, this one took out this low. $304,775. Yeah, so if we come down here, let's see how this candle closes. 24 seconds. That's 80 pips if you get up there. 87, 90 pips, 120. Yeah, I'd be willing to take a buy here. Yeah, yeah, willing to take a buy here on the pullback. So if you get a buy here, stop loss there, that's about 25 pips. And on this one, it's about 10, 12, 13, 14 pips. If you get one here, then we can push up to this, to 3139, that's about 85 pips. And then 125 pips to 3142, 3143. Let's see, stop loss would go under there, 3127.75. 7.75. Tight stop loss, so that's why I'm not chasing the trade. I'm waiting for the pullback. If it comes here, great. If it doesn't, no problem. That's the London low, creating support to push up. If you continue now and it doesn't come, then that's fine too. But I'm not going to chase price. That's okay. Yeah, I'm waiting for a pullback. Yeah, maybe at least here. I'm willing to take a buy here. It's about 40 pips. That's okay. Yeah, open 32.12. 3132.12. Right, that's that demand zone. 5-minute demand zone, a rally, two basic candles and a rally there. I have an order at 30.39, 30.39, and then an order at 29.07. Yeah, 2907. $3138. 3138. Yeah. If you get entry, so that's the trade. Let me just, there's an entry here, drop base rally. On the 5 minute, there's a rally base rally, rally base rally. That's one entry here. One entry at 3130.39, one entry, third entry at 3129, was around roughly 3129. Okay, stop loss under 3127.75, and TP levels 3138. Even 3139 is fine. 3138 or 3139, either of those are fine. And then 3142 and 3144. Okay, so one is active, one order is active. Let's see. Now, stop losses are quite small on these, 35 pips, 20 pips, 15 pips. So it'd be tough to manage risk because it's a tight area. Spreads are quite wide. That's 60 pips if you get there. Probably 31, 39 is where I want to, yeah, take partial positions at 31, 39. Now, managing risk is, yeah, gonna be tough on this because, yeah, because it's a very tight stop loss, to be honest. It's a 20. The support was formed here, and under that is just the wick is just a 25 pip wick. So it's quite tight area, but we're going to try. I'm going to try. I always try to manage risk, no matter what happens, however small the stop loss is, I still try to manage risk. So here's what I'm going to do. If a 15-minute candle closes below this 15-minute support, right? So you can see 15-minute support formed here, 15-minute support formed here, 15-minute support formed here, and 15-minute support formed here. So, which means not one bear candle could close below this, right? Not a single 15-minute bear candle could close below this. So let's say that is 31, 30, 50, right? Let's put a line there, 3130.5. Okay, 3130.5. If a 15-minute candle closes below this before hitting my stop loss, then I'm going to close. I'm going to close, right? Probably a couple, probably all my positions or a couple of them. But it's very tight. It's just 25 pips stop loss there, okay? So if it closes below, then I'm going to close, right? So I've got one entry triggered. Let's see if you can get to 31.39. So that's about 72 pips, right? And then the next TP would be 31.42 and 31.44. And the reason for these buys is, I explained this already at the beginning, after the prep work was done. We waited for 30-minute support to form at any one of these liquidity levels, either there, or there, right? There's an EMA there, there's an EMA there, and there's a liquidity candle here. And we're taking the buys, that's the pullback, 30-minute pullback. We're anticipating price to push through to 31.39. And then if we close a 15-minute candle closes above 31.36, we should push up to 31.42 and 31.44, right? Because same thing, there is 31.36. Yeah, if you close a 15-minute candle above 31.36.50, we should push up another 60 pips. And I've also said how I'm managing risk. That's a stop loss, 3127.75. You can have it a pip under, a couple of pips under, that's fine. But if a 15-minute candle closes below 3130.5, then I am closing maybe all of my trades, maybe all, or maybe most of them, right? And the reason for that, as I said, a 15-minute candle was unable to close below this level, right? You can see it struggled to close below. Whenever it came there, we pushed up, came here, pushed up, came here, pushed up, came here, pushed up again. So if we close below, that means the next one is likely to break the low and push down and hit your stop loss. Very likely, because it's a very small stop loss, 25 pip stop loss, right? So if you close below, we're very likely to push another 20 pips and hit my stop loss. So why let price hit your stop loss when you can avoid losing your entire risk if price hits your stop loss? If there is an opportunity to avoid, always take that. Always, always, always take that opportunity. Now, keep in mind, we could range, right? This is why I'm taking such a few positions, because I said tomorrow is the big day. With the announcement will come a lot of volatility and hopefully single directional volume, right? So we might just range until then. And the market is slow. So far we've had a 50 pip candle, and then the volume has died down. That's 35 pips. Yeah, there's no volume right now. There's no volume. I've always said this. If you've been here on the streams, you've heard me say this every day. You want to see candles that are larger than 45 pips on gold in the NY session. You're trading the NY open. You want to see candles that are 45 pips or more, 15-minute candles. That was a decent candle, but then after that, we have no volume. This is 35. This is also around 35. There's no volume. Whenever you take a trade, you got to always be ready for both scenarios. For the win, so you got to have your partial, because if price goes in profit, you know it might not get you if you're a trader that you know has a very hard rule where you take only 3-to-1 RR trades or 5-to-1 RR trades. I know traders like that who just have a fixed RR ratio on all their trades. If they get it, they get it. If not, price goes and hits their stop loss, then that's it, right? That's fine if it works for them. If they're making money, I got nothing against that. It's just that you got to have mentally you got to be prepared for both scenarios. If price goes in your direction and you go in profit, then you got to have certain areas based off price action that you are willing to take partial positions of. That makes sense, right? Based off price action, not just random, right? And the reason why 3139 is a area where to take partial positions, 3139 or 3138, because that's where the wicks are, that's where the highs are, right? So if you break this high and close above, then we're heading higher. But if we come here, tap 3138 and we reject, like here in the past, then we're coming back down, right? So that is why when price gets here, if price gets here, you're in profit. You're about 60 pips in profit, right? So why not take something off the table? Because price can tap it, come back all the way down and hit your stop loss. So take something off the table, right? That's one scenario. The second is price cannot come up there and push straight down and go hit your stop loss. So you need to look for signs. How can I take something off the table before price hits my full stop loss? Again, a very logical price action based way or how you can take something off the table. So if price, so there is 15-minute support that has formed here clearly. It hasn't, a back candle hasn't been able to close below 3150 since 11:30, around 11 a.m. IC market server time. There are many 50-minute candles there. So if now in the NY session during high volume time, if we close below 3130.5, then it's very likely that the next candle could break the low and push further down and hit your stop loss. So you got to be prepared for both scenarios. And in both scenarios, you got to be willing to take something off the table. And if you do that, your losses will always, always, always remain smaller than your wins. Yeah, so there's no volume. Market is slow. The 15-minute candle is about a 35 pip candle again. We have yet to see volume come in. Yeah, there is no volume. 14 pips. Nothing. Yeah, there is nothing. There's no volume at all. 16 pips, 15 pips. We're expecting this. Maybe there might be volume NYSE. Let's see. But it's very likely that the market is waiting for um, the speech tomorrow, from speech tomorrow, 2nd April. Yeah, there's nothing, there's no movement. So yeah, I'm going to be here for maybe another 5 minutes, 10 minutes. Let's see. There is no movement on price. Thirty-minute candle is probably closing a doji. I'd like to see it close a bullish doji at least. So then we have the next one could break the high and continue higher. But if we close a bearish doji, might make sense to close the position because then you're forming resistance and price could come down. Got to be careful. You haven't formed resistance yet, right? In the pre-NY session or NY session, we haven't formed resistance yet. Once we form resistance here, 30-minute resistance, we could push up to create a top wick and then continue down. So you got to be careful. It's going to watch this 30-minute candle. Here's what I'm going to do. If the candle closes, if we form 30-minute resistance here, you got about 2.5 minutes for the candle to close. If we form 30-minute resistance here, I'm going to have my stop loss under this candle here. If you break, because price is just, it's not moving at all. There's just no volume at all. So if you break this low, then we're very likely to push down. So I'm going to close the trade. Take about a 7 pip loss or 8 pip loss. That's it, right? 7 to 8 pip loss. That's fine. If we close a bullish doji, I'm going to leave the risk management exactly the way I said before. That's if a 15-minute candle closes below 3130.5, then I will manage risk. But if we close a bear candle and if it's a bearish doji and we form 30-minute resistance, then I'm going to bring my stop loss under this candle low, right? Because I don't want to go in draw. I hate drawdown. I personally hate drawdown. I really dislike drawdown. So if price comes against me, I find a way to manage risk. I find a logical way to manage risk, not just randomly close positions, but find a logical way based on time frames, on support resistance, to manage risk. That's all you got to do. Whatever system that you trade, if you're trading an indicator, if you're trading any other system, just find a way to manage risk in a very logical, approach it logically based off certain rules that you can follow every day, right? So if it's based off price action, then what sort of price action are you using? I basically use the 15-minute time frame and the 30-minute time frame candles. That's one. Then I use things like support or resistance. So these two basically, I use basic time frames and support and resistance. These two ideas to manage risk. So if you've been on my streams, you'll hear me, say how I'm managing risk, and it's always based off either a combination of these two or one of them. So we are forming resistance here. So stop loss is coming out up there. That low is 31.05, 31. Yeah. So I'm going to close as soon as we tap that. And we're very likely going to come and tap that. There we go. We're coming down. Here we go. Here we come. I'm going to manage risk. Finger on the trigger. And I'm going to close my pending orders also. Here we go. See, as soon as we form resistance, we started to push down. So if you break the low, then we're coming further down. If you don't break the low, fine. I'll keep my trade where it is and I'll let it run. But if you break the low, now we formed 30-minute resistance, and if you break this low, then we're coming down. We're coming further down. So why hold drawdown? But if you don't break the low and we push up, great. We push towards the TP, towards 3138. But we still don't have volume. Look at the volume is just dying. That's a 20 pip candle. This has pushed so far 25 pips. The candle just opened. Let's see what happens. But I'm going to keep this on the 1 minute. I'm going to be here for maybe another 15 minutes. And then let's see. Yeah, I'm going to end the stream in about 15 minutes, but I'm going to manage risk on this trade. Remember, money saved is money won in the markets. If you save part of your risk, that's money that you won, right? That's a win. If you save some of your risk, if you risk, let's say, I don't know, 2% on a trade or 3% on a trade, and you are able to manage risk in a very logical fashion based off price action, and you're able to lose, let's say, 1.5%, then you've saved 1.5%, which means you won 1.5%, because your planned risk for the day was 2% or 3%. 32 pips, 12 minutes. Candles need to cross 45 pips first to see volume. If you don't, then we're just ranging. It's nothing. We're just moving sideways. 30-minute is a doji. So this 30-minute has no information apart from the fact that it's formed resistance. Apart from that fact, it has zero information on this 30-minute candle because price opened and closed almost at the same area, at the same price level. So it offers, on this time frame, it offers us no information. If you go down to the 15-minute, also both these two 15-minute candles, which are part of the 30-minute candle, offer no information. We have a bearish doji and we have a bullish doji. They offer no information at all. So when a candle offers no information, you got to look at the previous candle, because you got to consider the previous candle as the valid candle, as the most current and latest candle would be the previous candle, which is this 30-minute candle that created support, that shows us that prices has created support and we could be pushing up. But the reason I brought my stop loss under here is because you got to find a way to manage risk, right? Always, I said, you always have to be ready for both, for your wins and for drawdown. Still staying on the 1 minute because price can pull back at any time and break the low. And we're going to manage risk because once price breaks the high, if it comes back and breaks the low, then price is just ranging and you don't want to be in the market anyway. Because now we've broken the high, we should continue higher. But if we break the high, which it has done already, and now we come back and break the low, then price is just going to go sideways. Either we're going to come down deeper and then probably go back up again, then come down again, then probably go up again. We're just ranging. So you rather not be in in a market like that. It just kind of tests your patience. So stay away from a sideways always if possible. Try to identify a sideways market early on and stay away from it. And there are ways to do so. Just one way is the way I mentioned. If a candle breaks a high and then comes back and breaks the low, then that means it's very likely that the next candle is going to do the same thing. So this candle has moved 38 pips, still not much volume. Yeah, I'll be here till NYSE open. Um, let's see what happens. There's just nothing. There's nothing happening. There's no volume. Not yet. At least not yet. We've not seen any. That's a 40 pip candle so far. It needs to cross 45 pips. 45, 50 pips is a good sign, which means that the next candle also can have similar volume and hopefully push towards a TP instead of pushing down. Right? That's the whole idea. 41 pips. 46, good. Let's see. It needs to close bullish. If it comes back, closes bearish, breaks the low, then it's just doesn't. Then it's useless because I'm going to get out of the trade. Okay. Yeah, that's good volume. 54 pips. Let's see. We're coming close to 10 pips away from 3138. We want to see a 15-minute candle close above 31.3650, right? Same reason as below. We couldn't close above. Since the London session, we couldn't close above 31.3650, right? We closed at it, we opened, closed below, we tried again, we failed. We tried here, we tried here, we tried to come up here, we couldn't, we failed. So if we close above, it's very likely that the next one is going to break the high and continue higher. If we don't, it's very likely, just like here, we're going to reject and push all the way down again. Because look at this, when price got there, push down. We got there, we push down. We got there, we push down, right? So similar things happening again. We came there, we're trying to, we're rejecting that area yet again. Yeah, if we come down and break this low, I'm going to close. Because we've broken the high, we should continue. But if we break the low, then we're just ranging. And we're going to probably come deeper and then probably push up again and then go down again. So we need to close above 31.36.5. A 15-minute candle needs to close above it. Two minutes, 2.5, 2 minute, yeah, just over 2.5 minutes. Let's see if we can close above 31.3650. If we reject, it might, yeah, if you reject, that means they're going to come down. We're pushing down. Yeah, seems like we're rejecting. Yeah, seems like we're pushing down. Two minutes more. Let's see if we can close above here. If we close at it, then the next one is very likely going to push down. But if we close above it, we could break the high and continue to 31.39 and then 31.42. 1.5 minutes. But I've got my stop loss here, just under. It's 8 pips. 8 pips. Yeah, about 8, 9 pips. That's fine. Under a minute. Yeah, we're rejecting. It's nothing happening. So, okay, let's wait for the candle to close. Close the doji again. Yeah, another doji. Is it a doji? Almost. Yeah, kind of. Equal wick on both sides. It's a nothing candle, doesn't mean anything. We could still come and break the low and continue down. Yeah, we rejected this area, we could push down. Okay, so I'm going to end the stream in about 5 to 10 minutes. Yeah, yeah. Uh, if price comes and breaks a 30-minute candle low, I'm going to close my trades, call it a day, because tomorrow the market is very likely waiting for Trump's speech tomorrow before for it to react to it. If you are trading the next 2 to 3 hours of the NY session, then the ideas are buys, just like I explained before. Price is coming down now. We gotta be careful. Yeah, we come here, close the trade. Pushed up 50 pips. So yeah, so the idea is for buys, 30-minute support needs to form at one of these liquidity levels. It's already formed here, and if this doesn't work out, then obviously you need to wait at the lower levels, right, for 30-minute support to form, because that's the first, that's the second, and that's the third. So if this doesn't work out, that means prices has come down for it not to work. So you need to wait for 30-minute support to form at this EMA or at this EMA. The best would be to wait at the liquidity candle, wait for 30-minute support to form, a tradable 30-minute bull candle to close, and take the trade to go up. You could put your stop loss under the liquidity candle low, but if that is very wide, then you can put your stop loss under the 30-minute candle low that created support, right? For sells, similarly, wait for 30-minute resistance to form at the liquidity candle and a tradable 30-minute bear candle to close to take sells to come down, right? Stop loss above the liquidity candle high if it forms here, or if it forms above here, if you tap 3150 and we form 30-minute resistance, then your stop loss would be above the 30-minute candle high that formed resistance, right? But keep in mind a tradable 30-minute back candle needs to close to take sells. Okay, so those are the ideas. And for your TPs for buys, these are the areas: 31, around 31.38 or 31.39, 31.42, and 31.44. For your sells, if you get sells up here, your stop loss, your TPs would be back around the EMAs. So wherever the EMAs are, you have the EMA there. So maybe just about a couple of pips above the EMA would be your TP level. So you would have, so I don't know where the EMA will be when price gets there, because it moves. It's a dynamic moving average, so it keeps moving with price. So depending on where the EMAs are, that would be your first TP level. Your partial positions would be at the EMA, and then at the second EMA, and then at the liquidity candle, right? So here, obviously, your TP level is set, would be around 3115. But for your partial TP levels above, if you take sells, you'll have to see where the EMAs are and place your partial TPs just a few pips above them. Okay, so those are the ideas. Now, I don't know if there's going to be volume, because volume came in very quickly and then died down. We just had a 57, 55, 6 pip candle, and now there's no volume again. So still have about 10 minutes for the candle to close. I'll be here for a few more minutes, and then let's see. And it's going to be the end of the stream. Personally, I'm not looking to take any more trades. I'm going to wait for tomorrow. I'm going to wait for tomorrow's news, because that's going to give us a lot of volatility and hopefully a lot of single directional volume that we can look for a trade, right? If we have, we're going to have a lot of volatility tomorrow for sure, because there's a lot of, you know, uncertainty in the market. But if you have a single directional volume, if you have like a clean move up or a clean move down, then we can look for the pullback to take the trade in that same direction, and it should be a pretty easy trade. So wait for that. Don't try to force a trade here. Don't try to, do something that you're going to regret later on. Yeah, we're coming down. I'm gonna manage risk on this. As soon as you break this low, I'm gonna close this trade, and that'll be the end of the stream. Here we go. Yep, closed. I closed my pending orders as well. So that's it. So I lost like 8 pips on that trade, right? 8.5 pips, 8.5 pips. That's it. Fantastic. Fantastic risk management. Right? Look at that. Now we're trying to close C. And why was that? We formed 30-minute resistance. So I brought my stop loss there. It makes no sense because you're taking buys. The buys were based off 30-minute support being formed, and now you have 30-minute resistance. It's a doji, but still it's formed 30-minute resistance, right? Even the indicator shows that 30-minute resistance is formed here, right? So now there's a 50% chance of price going up, 50% chance of price coming down, right? So why hold drawdown? If you come down, we're coming deeper, why hold drawdown, right? So that is why I got out of the trade, and it's ranging. So I'm not looking to take anything now. Um, I'll probably take a look at the chart in about an hour from now, and let's see if prices come deeper in. If it comes here, then I'll probably look for 30-minute support to take a trade going up. But if not, then I'm not going to do anything because price is clearly ranging and it's in waiting for tomorrow's news. Okay, that's the end of the stream. It's been a very slow NY open. Yeah, we've not had any volume, just been zigzagging. I'll be back tomorrow 7:30 a.m. EST. We should have a decent trade tomorrow if the speech happens before the NY Open or during the NY Open. Let's see. It's still tentative. We don't have a fixed time yet, but later on, I think as the day passes, we should have a clear time on when the speech is going to happen. All right. Okay. See you guys tomorrow 7:30 a.m. EST. We'll do the same. We'll do prep work. Look at that. Look how price is coming down. We formed 30-minute resistance. Look at that. And if I didn't close there, I would have been in drawdown, right? So that's the point. Now price can push back up all the way, but I don't know that, right? Nobody knows that. Price can come down. Price can go all the way up again, another 200 pips. Nobody knows that. So you got to work with what you see. And what you see is 30-minute resistance has formed and price has come down and broken the previous candle low. Get out. Take off 70% of your position, 75, 80% of your position. Take it off the table, right? Because you got to act on what you see, not on what you think might happen. All right, see you guys tomorrow 7:30 a.m. EST. We'll do our prep work and then see if we have a trade that we can take in the first 2 hours of the NY Open. All right, take care. Have a great evening.